welcome to my channel. My name is Rose. Hope you're having a wonderful day. Today we're gonna talk about buying a house. I know I'm not a financial expert, and I just want to share my journey in learning how the buying a house works in America, because there is the first time for all of us, and not a lot of people want to share those information with you, because it's such a taboo to talk about the financials or like how much your house is. Zillow did it easier because you can check other people's house or your own house, and everyone can see how much you bought the house or how much is the estimate of the current house that you're living in. But in general, it's still a taboo to talk about these things. And when you go to the experts, they usually have interest in you doing that financial transaction. So their answers are biased, which I don't like it. And that's why I want to share the journey with you, what I learned, and I can go deeper as you like to. I'm just going to go through them generally and also give some tips or exceptions of how some things works. But it depends on what you're interested about, and then we can have a specific topic about those things. But in general, we're going to talk about buying a house in America. Okay, so let's say, I don't have this. Let's use this one then. Or can I put this back and use another one, because I saw these colorful ones that I'm like, I want these. There comes a point that you're like, I want a house. Okay. So you start to look into it, save money, and usually people think that as long as you have the down payment money saved and you can pay the monthly loan or mortgage, which you can find the calculation and calculators of it online, then they think they're fine. But the truth is that there are so many hidden fees, or sometimes obvious fees, that you're just like, I didn't think I have to pay that upfront, or like I didn't think that it's my responsibility to pay. I thought it's the other person's responsibility to pay. And unfortunately, in this journey, you feel like your realtor is your best friend, is your buddy, and they're gonna give you advice, but they have interests, so that makes it tricky. Okay, the first thing first about the why I always do this. I'm gonna use this paper as a like my extra paper for myself later on, but let's do just just a new page for this. I'm sorry about it. House. Okay, so first thing first, the most important thing that everyone knows is the purchase price. This is the actual cost of the house that you can negotiate with the seller. It gets tricky on interesting markets and economy and like things that happens once in a century, meaning pandemic. When COVID happened, the market was like nothing anyone ever experienced. It was even different than 2008 and 2009. So it was a very difficult situation. I don't think buyers had the ability to negotiate with the sellers. It was that sellers were really lucky that they could choose between multiple offers that they got after a day, and they were like asking for like higher than what the house was worth it. And that's one of the reasons that we stopped looking for a house, because I was like, I don't want to contribute to this market and buy a house that is not worth that much with these crazy interest rates that goes higher every day. I just don't feel comfortable buying a house when fortunately I have a house, I'm paying a loan on it, but I just thought that my situation doesn't worth it. I'm going to talk about like what maybe be better for you to do instead of buying a house, or like how you can, change your strategy to like maybe use the most out of your money when you're buying a house. But it depends on your situation. It's a very personal choice and personal situation. It really varies person by person. So you usually, if it was 5 years, 10 years ago, you had the ability to negotiate with the seller and even like put offer less than the asking price. But in COVID market, it all changed. Like you had no room to negotiate. You even had to like waive inspection so you can put an offer and get the house, which is really scary. And we're going to talk about it too. The other one is the down payment. Okay, this is the amount that you have to pay upfront, cash. It varies from 3% to 20% usually. Some professions like doctors, they get some special loans. They can get the loans that have even zero down payment. They definitely have to pay higher interest, but the good thing about that is that if the doctor wants to relocate, if they want to relocate very in a few years, which they usually do because they're a resident and they want to go to a new hospital, or like they find a new place that they like to work at, when they change the house, because they put zero payment, and also because the price of the house usually increases year by year, when they sell the house, it almost like they were living there for free, because yes, the price increased and they paid higher interest, but they kind of are equal to each other. So it's like they're not gaining anything and they're not losing anything. But if you live somewhere for free for a few years, that's a win to me. You're not even paying rent, so why not? That's great. And then other thing is that the more down payment you put, the lower your interest rates are, the lower your interest amounts each month are. So your monthly payment will be lower, But it depends that if you want to live in that house for a very long time, yes, put 20%. If you don't know a better way to use that money to invest in somewhere, yes, put 20%. But if you think you can use that money better in some investment, it's better to, and you have enough monthly income, then yes, put the lowest down payment you can, and then use the rest of the money for investment and other things. And also, usually this 3%, which is a low down payment, they usually give out to the first time buyers, and it's not always available on all loans or for all mortgage companies, so you have to check that beforehand. Definitely mortgage loan if you're not buying the house cash, which is my assumption here, because if you have the cash, then at the end I'm gonna say which things you have to pay, but it will be you don't have to pay down payment, you don't have the mortgage loan, but it will be the purchase price, because this down payment plus this mortgage loan will have to equal to this, plus it will have some interest too, so because the bank or the company is lending you money. The one thing that I had misconception about was closing cost. This you have to pay when your loan is closing and when you're purchasing the house, meaning it's kind of upfront, meaning before the house is in your name, or at the time that you sign that the house will be in your name, or before moving there. This closing cost doesn't reduce the purchase price, is not included in the down payment, and is not included in the loan. You can ask companies to include this in here, but you don't get approved for it all the time. So you have to make sure that you check this, because it's not always included. It's not included by default. If you don't have enough money, you have to ask, but it depends on your situation. So this closing cost, it's various fees, like the person who is doing your loan, the banker, the attorney fees, the lender fees, the recording fees, and it's a lot of fees that just is related to this. So the person that you talk on the phone for the loan, for the mortgage loan, and everything that he or she does on their end and their team, they're the people who get this. Not directly, but the cost is for that tasks that they are doing, and it's usually 2 to 5% of the purchase of the house. So the higher your house is, the higher the price is, the higher the closing costs will be. So that's why in America sometimes you see that people don't change their house so often, because it's very costly, especially this closing cost that is not included in anything, or it doesn't reduce the price of anything that you're paying, and it's upfront. And then something that this is also upfront, but it usually it's a separate thing, but you might get your inspection through your mortgage company, so they might add this amount to the closing cost, and like it might be in the same document or like in the same transaction that you have to pay them. It's just someone that comes and assesses the house, but it depends on the person, and depends on the buyer, on the house condition of the house, because some people just get one inspection, but some get a specific inspections, meaning for like pipes, for the switch, the everything, like very specific specials of the house to just make sure that everything works properly. And it's very important, but they usually do one inspection, meaning mortgage companies just propose one, but you can get more. So it's again this price and this amount, this money depends on you, but it usually is 300 to 500. The next one is the appraisal fee. Sometimes, especially if the price of the house is too crazy, the company wants, someone to come and appraise the house. Which also this happens if you're refinancing your house. So someone always come and say whether this house is worth this much that the seller is listing or not. I think this happens before this, but it depends. If like you waive this, then it depends, I think, on the buyer that what is more important, but you kind of have to get both of these before actually closing the loan and buying the house. And one trick that people did during COVID was that because the sellers and the realtors were asking for much more than what the house was worth it, people, the buyers, realtors suggested to put a minimum offer, meaning if a house was worth the house was listed 500k, but the house was only worth, I don't know, it seemed like it was worth 450 based on Zillow estimate, or like whatever, that you could look at the house and see that. What they did was that, because this appraisal fee is really important, because this appraisal is very important, because if the appraiser doesn't appraise the house this much, then the mortgage company is not going to loan you for 500k, is not letting you buy that house, or just you can go to the next person, but they usually doesn't approve that. So they will appraise the house for 450. What you had to do was to say that, okay, I'm putting an offer, for example, for 70k, and we're going to give you 300 cash, 30 cash if it wasn't appraised. So the offer was like, we're giving you 500k, or if it was appraised for less than that, 470k plus 30k cash guaranteed by us. Meaning that even if the appraiser was appraising the house for 450, you, the buyer, would call your appraiser and mortgage company and say that, oh, in this appraisal document, they didn't list the backyard, they didn't list the shed, they didn't list like this thing that they renovated in their basement, so you could jack up the price to be more, and you had to like do it once or twice to like make this 450 be 470 for appraisal, Also, you could list other houses in the area with similar prices to say, oh, same house, very similar, like backyard, basement layout, same bedroom, same bathroom, they were listed for 490,000. So this is too low, you have to put this higher. So they put, for example, 470 at the end, and then you were guaranteed 30k. Or you would say appraisal fee plus 30k. So if the appraiser still didn't approve 470, it would be 450, but then you would pay 30k cash to the seller. So the final price of the house was actually 480. The seller was getting 480, but the documents, everything was written as 450. And the sellers sometimes accepted these offers, because if your house doesn't get appraised for more than a certain amount, then there's nothing they can do. Like they cannot sell their house. But at the same time, if they really have to sell their house, it's not like they can say, oh no, I'm just selling it for 500, you have to pay 500. You can pay 500 cash, but the mortgage companies doesn't approve paying higher than the appraisal amount, which is good. But people in COVID, because how the market was crazy, found these solutions to just lure the sellers to buy their houses that weren't even so great. Okay, after this, some of these things that I'm going to say is not exactly upfront, but it's kind of upfront. So these are even before you close the loan, okay? But there are things that kind of happens when you're closing the loan and when your first payment starts and after that. So these things are going to be things like homeowners insurance. It's really good to get one, especially the mortgage companies force you to get one, and the amount will be included in your mortgage loan payments. And this is just they're forcing it because it's a way for the mortgage companies, for the lenders to protect their investment, because they're basically investing in your loan in you, because you're going to pay that interest in 15-30 years, which will be a large amount of money in 30 years. And it can, as everyone knows, insurance can be, the price can be different based on location, the coverage amount, and the condition of the house. For example, if you sometimes we do this when we're shopping around, we just say, oh, we have a security system, we have camera here, we have camera there, and they're like, oh really? So they reduce the amount a little, because it seems like our house has a good security, that it's not easy to ruin the house. So these are really good things to mention when you're shopping around for your home insurance, or even for your car insurance. Please mention some things, not everything, but some things. We can talk about it later if you're interested. There are another things, property taxes. These are basically they call something called escrow, that if you're if you're not having a loan on your house, you get usually your bill annually. We get in Michigan one summer bill, one for our city, one summer bill, one winter bill, and we just pay them annually whenever we get them. But when you get a loan, you have to pay these monthly. I think at least for like insurance and taxes, you have to pay them through the mortgage company for a few years, and I think after that you can just do it on your own. But it's good that they're taking care of it, because you don't want to forget about your taxes and insurance, because especially taxes, if you don't pay it, I think for 3 years, your house is foreclosed. So it's really important. And because they're a mortgage company, they do everything to make sure that you're paying these amounts. They even do some analysis on your payments and on your escrow, maybe twice a year, to make sure that you have enough money in your I don't know what they call, like, account for your mortgage, to make sure that you can pay for all this plus their payment. The next thing is that private mortgage insurance. Most mortgage companies usually ask for this, and you have to pay it for the first few years, and I think after that you don't need to, but you have to definitely check, because, and they usually like put all this for the first few years, because the first few years of your mortgage loan has the highest interest, meaning in the first few years you're not paying as much as interest in your 10th year, because I don't know, maybe people just bought the house, they're struggling financially, they might change the house, they might not like the house as much, so they just want to make sure they are pulling as much as they can from the owners, homeowners. It usually, you get this if your down payment is less than 20% on some of the conventional loans, but I saw this a lot, so even on refinances. So I think it can be varied company by company and loan by loan, but we have different loans, like conventional loans, FHA loans. We can talk about them more in the future. Let me know if you're interested about knowing them. They have impacts on sellers and realtors when they see what kind of loan you have pre-approval on. So it really have an impact on what kind of loan you have, especially in crazy markets like COVID, when there is multiple offers for the seller. Okay, this one. Oh, another thing about property tax I just remembered is that when you buy a new house, the property tax usually will be reset. So if you're, for example, checking a house and looking at Zillow, or like you're looking at the documents that the homeowners, maybe they share, I'm not sure if they do that, and you see, like their taxes for the past, I don't know, few years were like 5,000. You're not necessarily gonna get 5,000. Everyone knows that taxes are gradually increases, things like, or changes happen to taxes, but it's not that even. When you buy a new house, usually the city has the ability to reset that tax rate, and they will give you a much higher amount for the same property for the taxes. So if you see a house that for the past few years the previous owner paid 5,000, you're not gonna get 5,000. you're probably gonna get, I don't know, 8,000-9,000, something like that. So you want to be careful about that and read about that city that you're buying, that your house is located in there, to just make sure that how they're treating property taxes for when you're buying a new house. What is the situation, so you kind of can estimate what happens with your property tax. And that's why I'm saying mortgage companies does analysis on the escrow almost twice a year, because insurances and taxes, they constantly changes because of the situation of the economy, because of the different laws that they pass. So it can affect your amount, and they always want to make sure that you have enough money that you are able to pay these and also their payment. So this escrow is going to go on your nerve a lot, but just wanted to let you know. Oh my god, I hate this one. Homeowners Association fees, or HOA. Recently a lot of houses have HOA fees, and they usually are responsible for taking care of the common areas. And I think in theory that's really good to have someone that also lives in your neighborhood and community to care about your neighborhood, about the security, about like common areas, wants to have everything as clean and as organized as possible. And I'm not saying that people who are on HOA committees are bad people. They definitely can be great, amazing people, or they can be very caring people. I just want to let you know that if they want to be bad people, they have the power to do so. They have so much power that is unbelievable. It almost sounds very illegal, but just wanted to let you know that please make sure that you read about them, you read about their policies. Sometimes I even heard that they don't share policies beforehand, but just be careful about this very much. Another fee is the realtor fees. That this is also made very interesting. Usually the commission of the listing agent, so this realtor fees, both the seller's agent and the buyer's agent will get this fee. It's usually between 3% to 5-6% of the price of the house, and usually the seller will pay that. So what is interesting is that when this amount is 3 and 5% of this amount, then I think everyone's goal is to jack up the price and make the buyer pay the most, isn't it? Because if it was $450, how much is 5%? $450,000 times 5%, it's $22,000. Now let's say it's $500,000, and okay, $2,500 difference in just one closing. And you see, like, why they don't, I hope everyone get a very good and fair realtor, But a lot of time when you ask your realtor on how much should I like pay for this amount, they, especially in COVID, I realized that they don't try to come up with a fair amount, because I personally, I don't want the house however that the price will be. No, I care about what is the value of the house. If the house is worth $450,000, I don't want to pay $50,000 extra. You know, I don't think I'm that rich, and I don't think there's a house that for $500,000 that I really love, that I'm like, oh no, I cannot live without this. I have to be there. Maybe if I'm rich someday and I see that house, then I'm like, I don't care, I just pay cash. I hardly need realtor that day, I think, but they will not let you know what is the fair amount. They let you know what is the amount that your offer will be approved, and that's not my goal. And I think my realtor had a hard time understanding that I want to pay a fair amount. I don't want my offer to be accepted no matter what. And that's why that we heard a lot of like ridiculous offers, like, oh, pay, say, like appraisal fee plus 20 or 30k, while I didn't even know about closing costs, and we had an amount for 20% for down payment, even that it was my first house, and I had money for more than that, but I had no idea about, like, I have to pay home inspection, I have to pay appraisal fee. I think appraisal fee is actually included in closing costs, but there are so many extra amounts that when you go to Google and Google calculate my mortgage amount based on the purchase of the house and down payment and like interest of the day, interest rate, they don't give you these amounts. They just give you, like, you give them down payment, purchase of the house, and the interest rate, and they just give you what is your mortgage loan payment will be monthly. And you have no idea about all these other things. And we were like putting on our offer that we're going to pay 30k more than the appraisal amount, which is insane. And at the time, I think we were very hyped about buying a house, like the interest rates are going up, and I didn't know about all these things. I asked when we were like talking about this, I said, and I think home inspection too, I said to my realtor, is there any other cost that we should be aware of? And he just said, like, closing costs. And I was like, okay, what is closing costs? And he was just like, oh, they just, when they're closing your loan, it's like it's a 2-5% amount of your price. But still, I didn't know the details. I still didn't know about the others. It was that I had to constantly begging for information to get those information, which was very unsatisfying to me, that my agent needs to communicate with me. They know that it's my first time. They know that, like, I'm very, like, confused about this whole process of buying a house. So it's just like a little crazy, but you just want to make sure that you do your own research too, because there are a lot of extra fees. These realtor fees, usually seller cover this amount, but again, in COVID, we were seeing a lot of crazy things, that sometimes buyers. Sorry, my phone just died and I had to plug it in. So I think I covered everything. If there's anything that you want to go more in depth, let me know. I'm happy to do it. I did a lot of research when we were looking for a house last year during COVID. So we saw a lot of craziness, and also we even put an offer, but we didn't buy the house because we thought it wasn't in our best interest to do it. Definitely, if you have a specific profession, like you're a doctor, or maybe there's a specific career that you have that might qualify for some specific loans, make sure you research about them to make sure that what are your options basically. And also if you know how to invest your money, if you have any idea on how to start a small business, it's better to put as less money as you can in cash or your equity in the house, in the purchasing of the house, and use it somewhere else, because the expectation is that money will be more than its value in a few years. While for the house, if you sell your house too early, it is to your disadvantage rather than advantage. Even if the price increased, you see there are so many fees that might not be worth it. So it depends case by case, situation by situation, definitely economy and market. One other thing that is really important is locking an interest rate. You can lock your interest rate if you think that the interest rates are going higher. Usually that has an expiration date for a month or 2 months, and it's better to close your whole deal for the house in that period of time. But some people also don't lock their rate because they expect maybe the interest rate to go lower, or they think that the interest rate is not going to fluctuate that much. So it depends on what you think is the best for you. And basically, if you lock your rate, if today, for example, it's 4%, and in a month the interest rates are 4.5%, you still can close your whole deal and loan on 4% because you already locked your rate. And usually you have to lock your rate on your pre-approval. You usually talk to your mortgage company first and just tell them what is the range of the house that you're looking for, approximately what is the location, and what is your financial situation, meaning do you own a house, do you rent it, what is your income. You probably should show your credit reports, your income, pay stubs, your tax history maybe even. And then based on your situation and your monthly payments and your debts, which they usually look at debt to income ratio, DTI, which we talked about in the other video. Please look at here for that video. Based on that, if your debt to income ratio is less than 45%, then they usually give what you need. And with that pre-approval, you can go and see the houses and put your offers with your pre-approval of the loan. And there are different loans like conventional, FHA, etc. It has an impact on the seller when they want to decide whose offer they want to accept. So that's also part of the things you want to make sure you consider. Hope this was helpful. We also talked about locking rate just now, pre-approvals, and generally where you should go first if you want to start the process of buying a house. I can go more in depth for any of these. Just let me know which one you're interested in. I would happy to walk you through my own research and my own experience. Hopefully it can be helpful for you. Till next time, bye bye. Have a great day.